Looking out beyond, the next 6 months, just looking at it on a several year time horizon, the precious metals represent value unlike almost any other market today.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is David Hunter, a contrarian macro strategist with more than 40 years experience on Wall Street. David, thank you so much for joining us today.
Yeah, hi Elijah. Thanks for having me.
It's great to have you. Now, a lot of people have been reporting on your prediction, this 80% stock market crash that you're looking for. This is based on a lot of research you've been doing and a 40-year cycle you've been looking at. So I know a lot of our viewers may have already heard this prediction, but kind of your reasoning behind why you're looking for an 80% stock market crash, because that's a pretty bold prediction on your part.
Sure. Yeah, it's really the end of a 39-year secular bull market. So it's not a timing cycle. It's not that it's 40 years and that we're overdue or we're due. It just happens that I think the secular bull market started back in August of 1982. And I used that as the start date because that was really the beginning of disinflation. We ran interest rates up to 15%, inflation up to 20% in the early 80s. And it was just the beginning of the process after Volcker clamped down on inflation. It was just the beginning of the process of ratcheting down inflation from that 20% down to almost zero in the past year. It's picking up again here. And I think it will ultimately end in deflation next year. So a deflationary bust. So it's really just coming to the end of a long secular bull market, coming to the end of a cycle in terms of an economic cycle here. The real reason I'm calling for a deflationary bust is simply because we've got over $250 trillion in the financial system around the world in debt. And then we've got quadrillions in notional value of derivatives, which is another form of leverage on the system. So it's my sense that we are late in this game. I will say I'm calling for a melt up first and have been talking about a melt up for a good long time, well before anybody else. And in fact, back in March of 2020, said we'd see a melt up that would take us to, 4,300, maybe 4,500. I've since raised that to 4,700 on the S&P, 17,000 on the NASDAQ, 38,000 on the Dow. My sense is if I'm going to be wrong, it's because I'm too conservative. I wouldn't be surprised to see the S&P above 5,000 this year. I wouldn't be surprised to see the Dow get up above 38,000 and NASDAQ above 17,000. So we're still not there yet, but a bust is coming. I think it could. Bust refers to the economy. Bear market refers to the market. So it's an 80% bear market, followed by a global bust, which I define as something worse than a recession, but a lot faster than a depression. So, 2022 looks like it's shaping up to be a pretty rough year as we start to unwind everything. But I expect the recovery cycle to follow the next year.
And why do you think the timeline has kind of been extended?
Yeah, it's really a process in forecasting. You pick, you pick out the levels you think it's going to. And then as more evidence comes along, as you move through the cycle, lots of times you have to change those numbers. Timing, people mistake my forecast for trading calls. They are not at all. So time is kind of a listing as a possibility. If all goes right, this is the earliest I see the top coming or the beginning of the bear market coming. And people take that as some precise trading call, and they say, when you get there, how come it hasn't happened by that time? Well, for example, I said we could see a top in the second quarter of this year. That was just saying, if all goes right, if the markets move straight there, you could get there that quick. But it's, the market's going to dictate when that comes, and it gets stretched out lots of times by consolidations along the way. So it's not so much that's taking longer as, it's normal for the market to kind of ebb and flow, and it does stretch things out. So I think the mistake is people misunderstand the time that I put attached to a forecast is really just saying that's one of several possibilities. So anyway, I do think we could see a top again. It's very possible we could see a top in the market in the third quarter. If I were putting probabilities on it, I'd say it's greater than even chance, much greater than even chance that we'll see a top by Labor Day, and that a bust will follow, a bear market will follow that. A bust will probably be in place next year. So I think we're getting closer, but just people hear 80% bear market, and they don't necessarily hear the other side of it, which is that before we get there, this market can still, the NASDAQ could still appreciate by, well over 20%, the S&P, 15% from here. So don't jump the gun here and assume that the bust is this summer. I don't think that's the case.
I think it's really interesting because your analysis is very long term. I mean, you talk about this 40-year cycle. I think that's so interesting because a lot of people have time horizons a lot shorter than that, right? But taking it from such a long-term view, I think is so helpful and really puts things in perspective.
Yeah, macro is a big picture thing. So, there are economic cycles within this secular bull market. So we've had several recovery cycles and recessions going back to 1982. So it's not one big long cycle in terms of economics, but from a secular bull standpoint, it really is. And I used 1982 because that's when PE multiples started to expand. They were single digits in 1982, and now they're in the mid 20s. That's because interest rates came down, inflation came down, then interest rates followed, and PE multiples are basically the inverse of interest rates. So it all fits in terms of lower interest rates led to higher valuations. The Dow back in August 1982 was 780. We're now, 36,000 plus. It shows you how far we've come in that 39 years. And I just think we're late in that game. The other thing that happens is that markets, as they get closer to the top, the slope gets steeper. And that's why I'm calling for this last leg of this bull market to be almost vertical, what I call parabolic melt up. And it just, we're going to reach the euphoric stage. We're not there yet. Everybody wants to say everybody is bullish. It's not true. There's a lot of people, riding the wave, but they've got one foot out the door saying, gee, I think top's almost here. That's not what you're going to see at the real top. At the real top, I think people are going to be arguing for why this thing has a long ways to run. Yeah, it's just simple psychology.
And with respect to your price predictions your predictions for the stock market, you also have predictions for the kind of the short term for precious metals as well. You see gold hitting $2,500 an ounce, silver going to $45 to $50. What are some of the reasons behind why you're so bullish right now on precious metals? Sure.
I'll just talk gold first. Gold had a great run from 2001 to 2011. It ran up from $250 an ounce to $1,900 plus. And since then, we spent, all the time up until a couple of years ago in consolidation. So there was a very long consolidation. It broke out of that consolidation. I can't remember where it came out, but it was down, 1,200 or thereabouts, and ran up to 2,100, and then corrected all the way back down, and not all the way back down there, but came out of the March 2020 lows at 1460. So we're on our way in terms of move from 1460 on the way what I think is 2,500. It's been a little disappointing to a lot of investors because it's seemed like it was getting going, and then it stopped and corrected again, started to go again. It just seems to be fighting that uptrend. And yet, from a big picture, again, stepping back and looking at it from a longer perspective, the chart looks great. I see nothing here that changes my mind that we're going to see 2,500 this year. And silver will be sympathetic to that move and see 45 to 50. And right now, again, we're in that period, the last week, where it's just weaker. The last couple of weeks, I guess, has been weaker again. And you hear a lot of people throwing in the towel and saying, that's it, I give up on the precious metals. I look and I say, this is just another effort to shake out the weak hands. And I see an inverted head and shoulder. Nothing in what I see changes my conviction that we're on our way to 2,500 on gold and at least 45 on silver, maybe higher. And then we'll have a correction probably during the bust. But my long-term forecast going out to the end of the decade is that gold's going to be $10,000 or more, probably more, and silver is going to be something in excess of $300. So there's a big long bull market ahead. I just think people sometimes decide that it's supposed to move on their time horizon. Markets move on a time horizon that's not up to us. And sometimes you have to just be patient.
Definitely. I think patience is definitely a very key element there. Now, with respect to gold and silver rising, as you're talking about this stock market melt up and then crash, what do you see as the timing for those two things to kind of coincide? Because when the stock market crashes, normally gold and silver fall with it. So your perspective on that, will it be different this time?
Let me put, not necessarily. Let me put it this way. The stock market is going to be much more damaging, much more punishing sell-off. I do think that gold and silver are going to have moves this summer along with the melt up in the stock market. So I think they will move up together to some extent. That doesn't mean they top out exactly together. The equities could top out, a month or two before gold and silver top out. I don't know. I'm not really caught up in that kind of a short-term call. I do think the bear market in stocks and the global bust will have an impact on gold and silver, so that I do think they will sell off. My guess is they're going to sell off far less than the equity market. So if the stock market goes down 70 to 80%, gold and silver might go down 30 to 40% or less. Might even be 25. So they will definitely be relative performers compared to the equity markets. And part of that is because the central banks of the world are going to have to come in with both feet to try to stabilize things as the financial market melts down, not just stocks, but we're going to have, banking crisis, et cetera, around the world. So you're going to see a lot of money created. If people think what we saw in 2020 or between 2020 and now was a lot of money, just wait, because I think this is going to be so much more. As I say, the Fed's balance sheet could grow to something in excess of 20 trillion, might even get to 30 trillion in response to the bust. It's going to be necessary to try to stem the tide of financial meltdown. As that starts happening, I think gold and silver are going to catch a bid. So that will limit the downside, but it'll still be painful. I mean, if gold and silver sell off 25 or 30%, it's not going to feel good. And miners obviously probably sell off more than that. So it's, you will have a period, might be a matter of a few months, where they correct along with stocks, but then I think they bottom much sooner than the stock market, and will start their next leg up, a couple months earlier than the stock market does.
And with respect to precious metals, a lot of people have looked at gold and silver for, the last 10 years and seen, they've largely gone sideways, except for really last year, they finally moved higher. Now, your perspective on that, kind of, what is the possibility of that happening again? Or are prices at these levels really unsustainable and they have to move higher?
Yeah, I think the story of the next cycle is going to be inflation. As I said, the response to the bust is going to be massive money, and money way times anything we've ever seen in history. So that massive money, when you overwhelm a system with money to that degree, inflation's going to be the result with a lag. It's not going to happen right away. We've already seen the money of the last 15 months has led to an inflation outbreak here. We've broken out of long-term downtrends. I think we'll dip back into a period where we actually go into deflation for the first time since the 1930s, but it won't last long. It might last a year or less. Beyond that, because of that response of money, you're going to jumpstart an inflation cycle unlike anything we've seen since the 1970s, early 80s. I'm predicting a full retrace of inflation back to the high double digits by the end of this decade as a result of that money printing. Gold and silver will respond to that big time, as will most commodities. Next cycle will be all about commodities, the metals as well as agricultural commodities as well as other materials. So, that's 2023 and beyond, but that's coming. And gold and silver will be, I think, probably at the very top of the performance list when we get into that cycle. Again, the consolidation from 2011 to 2018, it was extra long, but it had a lot to do with the fact that you went from 250 to 1900. That's a big move. People never talk about how big a move we had out of that very big bottom in 2001. It was a double bottom, basically. It bottomed, I think, in 1999 and double bottom in 2021 or 2001. I'm sorry. And from 2001 to 2011, you had that big run. So yeah, you had a consolidation. Normally, you'd expect consolidation like on something like that to last for 3 years, maybe, and it instead extended out 7 years plus. So that discouraged a lot of people. We had a lot of gold bugs that said, "Hey, I don't care what gold does. I'm a long-term holder." Well, 7 years was more than they could endure, and a lot of them gave up. So that's the nature of markets. We have to remember that these things are not, made in some specific model that they follow some prescription all the time. And because we had a long period of disinflation, they spent a longer period in that consolidation. But that's a bullish thing. Coming out of that consolidation means you have a very long runway ahead. And so I couldn't be more bullish. I think gold and silver are by far the most attractive assets longer term out there. Stocks have had their day. Bonds had a great run for, a long time. Short term, they can, bonds can have a little bit of a run here, but basically looking out in that longer period, inflation is going to be not so great for financial assets in general, bonds in particular, and it's going to be very good for commodities and metals.
I think that's such a good point to have that long-term perspective. And you mentioned how this consolidation we've been seeing for the last 10 years is actually bullish for precious metals. And so obviously we can't guarantee anything, but it just seems like it's more likely then, because we've seen this consolidation, that precious metals would move higher. But then your perspective, also, you mentioned inflation coming soon, and we have seen one of the things that was kind of surprising was we saw the dollar index rise. And that is one of the things that just recently in the last couple of weeks has been putting pressure on metals. So your perspective on the dollar index going forward, if we do see inflation really start to pick up?
I'm a bear on the dollar, I would say, over the course of the next several months. Dollar came down from almost 104, the dollar index from almost 104 down to 89. So it's not unusual to have a counter trend move. It almost is expected. So a move back to 92 or 93 is just a normal counter trend move. These markets don't move in a straight line. When everybody decides they understand where a market is going, it's time for it to shake things up and go the other way. So it got oversold and it bounced. I think that bounce is not going to last much longer. I wouldn't be surprised if we rolled over this week or certainly in the next, 2 or 3 weeks. And I think that you're going to see 85 on the index, which has been my call for a while. And I think there's a pretty good chance we might even see 80 on the index. So we're, 92 and change now. If you get down to 80, that's a huge move down. We've already come down from 104 in the last year. So then in the bust, keep in mind, it's a global bust. It's going to be a crisis like we have not seen in the post-World War II era, bigger than 2008-9. You're going to have a lot of people looking for a place to run to hide, a place for safety, for flight safety. I think the dollar will still be the currency of choice when people feel so uncertain. So as much as we have problems, the rest of the world has bigger problems. So I think the dollar will get a bid, and whether it's from 85 or from 80, I think you'll see it run up to at least 120 is my call, and might even get as high as 140. Once you get into those kind of flight safety trades, you just don't know how far it can go. So I'll use a 120 to 140 wide range. And that happens probably next year, the bulk of it. And then, looking out over the course of the balance of this decade, I think as that money printing takes place, it will begin to erode the dollar. And I would not be surprised to see the dollar well under 50 by the end of the decade. So, I'm bullish. I'm bearish now, bullish intermediate term, longer term, probably bearish again. So, and that decline in the dollar will obviously be another thing driving commodities higher, at least in dollar terms.
Sounds like quite a wild ride ahead then, because we're going up to 120 and then down to 50 within a decade.
Yeah, it's going to be a wild ride. And I do think, again, even a bigger cycle, I use the term super cycle to describe cycles that are the big cycle between two depressions. I think we could see a depression in the 2030s simply because of all this money printing and all the excess of debt in there. At some point, it's not going to be able to be managed. You can't have interest rates going back to 15% and debt that's 250 trillion plus, not in the U.S. but around the world, probably going towards 350 or 400 trillion this decade. How do you finance that? With you can barely finance it with rates at 1%. How do you finance it when rates go up tenfold or more? So I think there's going to be a period out probably late this decade, early next, where things collapse. And in that collapse, who knows what happens? But it's in that big cycle, that bigger picture super cycle, that you have to realize we are going to be dealing with some huge volatility in both directions and lots of changes as we go forward. So, people need to be aware of that, not lose sleep over what's going to come, 7, 8, 10 years from now, but just prepare yourself from the more you can be, debt-free or have little debt, the more you can take care of your assets and preserve them, the better able you are going to be to handle whatever comes along.
Are there really any options in your mind to really reduce this volatility, or should people just kind of prepare mentally for this?
I don't know. It's a forecast. It's what I think's coming. So it's, I can be wrong, but I just think, forecast is what you expect the markets to do, what you expect the economy to do. Would something come along that can change the trajectory? Sure. But as I see it right now, we're late in a super cycle. That means risks are a lot higher than they were, 20, 30, 40 years ago. And that's, it's just kind of the natural course of history is that you have these big, long cycles. You run them up, and then unfortunately they collapse.
And I guess on the investing level, or if people are interested, because a lot of our viewers are, concerned about their finances for the future and want to hold something that is safe and secure. In your perspective, what is maybe the most safe and secure what are maybe the most safe and secure assets right now? Yeah,
it's a tough one to answer because it really is, because I'm talking about, the markets moving and these various factors moving in both directions over the course of the next several years. Depends on what time frame you're talking. Very short term bonds, treasury bonds are probably going to rally here. Equity market's going to rally here. But you get out beyond a few months and interest rates are going to be moving up, which means bonds are moving down. And equities are going to top out and roll over. Gold and silver, to me, I will put it this way. Looking out beyond, the next 6 months, just looking at it on a several year time horizon, the precious metals represent value unlike almost any other market today. I mean, they haven't moved. Today, gold is lower than it was in 2011 at the top. Silver is well below its $50 high. So it's been years of consolidation that has these held back. And yet I think the fundamentals going forward look brighter for those two assets than almost anything out there in terms of, inflation coming. You've got to get through deflation. So it's not going to be a straight line. Next year could be a tough year for commodities and for metals. But from here, not worrying about the things in between, from here to the end of the decade, there are a few assets that can compare on a valuation basis to what, the metals look like right now.
All right. Well, David Hunter, we really appreciate your time today. If our viewers are interested in learning more about your work, they can subscribe to your newsletter. And also, where can they find you online?
You can find me on Twitter. My handle is @DaveHContrarian. So if you go to @DaveHContrarian, you'll find me there. I'm usually on there every day, if not every day, certainly several times a week. And if people are interested in my quarterly investment letter, they can reach out to me by direct messaging me on Twitter, and I'll provide details. It is a subscription letter, meaning there is a cost to it. So if anybody has interest, just direct message me and I'll get right back to you with details.
Fantastic. David Hunter, once again, thank you so much for your time, and God bless.
Thanks, Elijah. Thanks for having me.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.